This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Chapter 2 is about the income tax computation, and we're going to have a look at how individuals are assessed to tax in the UK. So first things first, the tax year is not from January to the end of December. It runs from the 6th of April to the 5th of April. So the tax year that we are dealing with is 23-24, and it runs from the 6th of April 23 to the 5th of April 24. And what we do with a tax computation is we're going to bring all the various sources of income that an individual might have into one computation, and that computation then we'll use to calculate how much tax needs to be paid on that income. Now there are two main parts. Oh, one thing I forgot to mention. 15 mark. This is where it's likely to turn up. This is where it's likely to turn up in section C of the exam. You will probably have to do a computation in full for income tax. It's very common. You will also get asked some things in the multiple choice or even in section B, but it may turn up as a full section C question. So, two parts. First, the computation of their income, so everything that they have, less any allowances that are available. And secondly, the calculation of the liability. Now that's different. That's what they're liable for, but they may pay a different figure because they may have paid tax at source on some of their some forms of income. And we're going to have a look at the computation in a moment. So it's normally divided, the computation, into three columns. Non-savings income, it says there employment income or trading profits for self-employed, property income, pension income. So those are all lumped together under the heading of non-savings income. Then we have savings income, which is from a bank or a building society. And thirdly, dividend income. Now, it is important, it says there, because different rates apply to different types of income. The pro forma that we're going to have a look at on the next page is the one that is recognised throughout the industry. So the revenue, expect it to look like that. Your examiner has prepared it with that in mind. That's how it looks in your manual, and that's how the model answer for the examiner, the marker, that's what it will look like. So well presented, neatly laid out. Okay, now I appreciate it's on a computer on a spreadsheet, so make sure you put the column headings in, that you put lines in to divide the income where it's necessary, and that it's well labelled and presented. Okay, now we've talked about the three types of income. There are some incomes that are exempt from tax. These are the main ones that you are going to come across. Interest or bonuses from a national saving investment certificate. That's different from a national savings and investment account. Okay, so that's certificates. Interest and dividends from an ISA or an individual savings account. Anything to do with gaming, any lottery wins, should you be so lucky, and premium bond wins. Those are all exempt from income tax. Now, if you get one of those in an exam, okay, I'm going to write you a big message. Do not ignore them. What we have here is a rule, and the rule is certain income is exempt. If you ignore them, then the marker isn't sure whether or not you just ignore them because you don't know what to do with them. What I want you to do is to either write at the bottom, this income is exempt, i.e. I know the rule, I've applied it, or add it into the computation and write next to it exempt and then put 0 in. You have shown, therefore, you understand the rule and you understand the impact of the rule. Tax is strange in a lot of senses. You don't, particularly in these exams, you don't get marks for getting the answer right. Now, in reality, your client wants the correct answer for the amount of tax he's got to pay. But in an exam, this is about the process. Do you know the rule? Can you apply the rule? And have you followed through on the process and done the calculations? Every time you put something through your calculator, you must write it down or type it somewhere on your answer, because there are marks for the process, the way you've answered it, not necessarily for the answer. Okay, very important. Do not ignore exempt incomes. Now, here's your pro forma. Always, please, give it a heading. Okay, and you'll notice, therefore, we have 3 columns and a total column. Trade profit, less any losses brought forward. We'll deal with those later. Employment income. Now, you may well have had to do something for employment income or a pro forma to have brought that together at this point. You may have had to deal with some benefits in kind. You may have had to deal with some expenses. So this may be an answer from a previous pro forma. You can see also property income in the non-savings column. Dividends over here in the dividends column, bank and building society and other interest. All of them, and then in the total column. Look where the lines are, very important lines. Less, we have qualifying interest. And again, we're going to go through all of these things as we go through. Or any trading loss relief that we may have. Again, a line and a subtotal. And the personal allowance. Now, note on personal allowances. At the front of this manual, and the front of every exam you ever take, whatever level, from AAT all the way through ICA, W or CTA, there will be tax rates at the front of the exam. Use them. Never guess. They change on a regular basis. Always check. In fact, I have seen in the past where examiners, markers, have deducted marks where a student has not looked that up and put the wrong figure in. Okay. Make sure you read your tax tables and check them regularly when you're filling these things in. You'll notice the notes underneath. Employment income includes things like salaries and wages. Include them gross. We'll discuss that again later. Before deduction of taxes at source. Now, it will always be stated gross in the exam. So it might say a salary of 20,000 with pay as you earn, which is deducted at source of, I don't know, £2,500. Okay. That is not 20,000 plus £2,500. That's the gross figure of 20,000 with £2,500 deducted from it. The deductions from total income and the personal allowance, they are deducted in that order, and they are also deducted firstly from the non-savings, this one first. If there is any allowance left, then it goes there. If there is any allowance left, it goes there. We have lots and lots of examples to go through, so you'll see how this works. But it is in that order because you tax the non-savings income first, then you tax the savings income, and then you top slice, that's a term for tax term, you top slice the dividend income. It is always taxed last. Okay, your personal allowance is your tax-free amount, and the rate is found in the tax tables. Always check, never guess. And currently it is £12,570. So always check, always make sure that you have checked that. Very, very important. Can't emphasize that enough. Okay, so I mentioned earlier that there is a difference between a tax liability and a tax payable. So a tax liability, so we're in part 2 now. We've done part 1. We've got to the end. We know how much income they've got after allowances. Part 2, tax liability. That is how much income tax is due on that income that you calculated in the first computation. However, we need to now take off anything, and I mentioned pay as you earn. So when you have a job, the employer will take income tax from and national insurance contributions from your gross income, and you will get the net figure. So the gross income is the one that goes in the calculations. The tax that you've suffered at source, that goes at the bottom of the calculation.